Well, hello, ETF fans. Mike here with another video insight. I'm going to start a new weekly video insight called Money in Motion, where I highlight something I found interesting from our weekly recaps. For those of you that follow us, know every week we put out a number of channel recaps where we highlight league tables, flows, performance across our 18 ETF channels slash composites, which represent the over 100 ETF categories we break down on our gated system. Just to give you a quick idea for those of you that don't are new to our research. All of our weekly recaps can be found on the homepage just by switching from daily to weekly recaps. And you can go into these weekly recaps by clicking on the weekly recaps button, and you'll be able to go through all of these different weekly recaps. Alternatively, if you're looking specifically for a channel, you can navigate directly there by hovering over your ETF channels, going into the specific channel that you want to go into. This week, I want to spotlight the Size and Style US channel, and I want to pose a very simple question. Are investors giving up on large cap value? And why I pose this question is available in our free reports. So if I click on the weekly recap for Size and Style, it's going to provide a great overview of what happened last week in terms of performance, in terms of leaders and laggards at the ETF level, across large, mid cap, small cap funds. It's going to break down all of your flows over time horizons, 5-day all the way out to 1 year time horizons. And then at the very end, we'll highlight what's happening with the brands across this from a league tables perspective. What issuers are dominating the AUM, which issuers are seeing the largest inflows, outflows. But specifically, if you want to go deeper, create an account for all of our regular followers. You know this already, but if you create an account, all of these latest reports become available. Most of these reports and all of our hyperlinks are free resources, though we do have some premium resources like the technicals report, fundamentals report. But specifically, I want to talk about flows and why I'm about to dive in to this value versus growth question. So if I go into the AUM and flows report, this is a very in-depth report, free to anybody with an account. It's going to provide a high-level overview of flows across our 9 size and style boxes. And then, of course, if I scroll down, we'll get into a breakdown of assets. So we can see 56% of the nearly $7 trillion um, in this channel is in large cap blend with 1.2 trillion in large cap growth, 857 billion in large cap value, and then scaling down mid small cap from there. As you scroll through this report, there'll be a number of different charts designed to help you identify trends, right? So as I'm going through this, I can see US AUM and flows just broadly, all US size and style flows over a 1 year rolling period, and see how they topped out this year in January at nearly $250 billion on a rolling basis. And then, kind of flash forwarding today, we're right in line with kind of that 1 year average. You can see that plus or minus standard deviation line to just give you an idea. But the chart that really continues to grab my attention is right below that. It's the large cap growth versus relative flows. And you can see this is a five-year time horizon. The bar charts represent the relative growth versus value flows on a monthly basis. And then, of course, the line here, relevance to cumulative for that time period. We can see cumulative 78 billion more flows have gone into growth versus value in this category. And that's a big number. And I know this because I've been following this for a long time. And historically, value flows over the last decade or so have actually outperformed growth because most investors or most advisors and asset allocators that are managing these portfolios are selling the winner and buying the losers. So even though growth may be been outperforming significantly over the last decade, when these asset allocators go to rebalance, they rebalance into value because that's what's underperformed. The prudent thing to do, mean reversion. However, the last couple of years, we've seen this breakdown. And so that's specifically what I want to dive into today. So I'm going to go back to our web page here, scroll up to the top of the page, and I'm going to go into our member access platform. Everything I'm about to show you, 100% free. You just got to create an account. I'm not using any of our premium data sets or tools today, but I'm going to navigate to our databases on the side panel, and our navigator tool. And our navigator tool, if you've watched any of these video insights, it's where you can really mix and match all kinds of different data sets, group aggregate across the ETF landscape. But obviously today I want to isolate large cap value and large cap growth. So to do that, I'm just going to go over to our filters on the side panel over here on the side of the table. I'm going to set a couple of quick classification filters. First, I'm going to set it at the equity level, hit apply. Next, I'm going to set it at the composite level. We're going to focus on just US size and style strategies. Hit apply. See that $6.9 trillion there. And then lastly, I'm going to go into category. I'm going to deselect all, and I'm only going to highlight growth and value. So once I hit apply there, for purposes of this, I don't need to see all the return data, though if I open this up just for your purposes, we can see, year to date, on average, large cap growth funds up 20%, on average, US large cap value up 10%. So just a continuation of the trend we've seen over the last several years. But I'm going to go ahead and remove that so we can see this a little bit clearer. So I'll remove all the total return fields, and I'm just going to focus in on flows. I'm going to add in 3 and 5 year flows so we can get a little longer time period here. And over that full time period, it's pretty even. 5 years, we can see 311 to 281, but then it really starts to diverge, right? Large cap growth, 248 billion to 111 billion. But what I really want to show you is visually what I mean by have investors given up on large cap value. So I'm going to hit apply. Just for those of you that are new, by hitting apply, all of the filters I applied to the data tables now get applied to my charts tool. I open up my charts. It's going to provide me some breakdown of the market. I'm currently grouped by asset class, so I'm going to switch this to category. And now what it's going to do is it's going to show me a breakdown of large cap value versus large cap growth. So wait for this market share report to open up, and I can see currently of that, let's see here, $2.1 trillion in large cap value or large cap growth funds. Just under 60% is large cap growth. So nothing crazy. Actually, if you look at the market, it's broken down more than that, just looking at the S&P 500 by splitting out the underlying companies. But this is, active decision to allocate into growth products versus value products. So investors making the decision, growth over value. That's how it breaks down from an AUM perspective. To visualize what I want to talk about, I'm going to switch my time period to annual. I'm going to focus in on the AUM chart. And as we know, we just said, as of right now, it's about a 60-40 split. But if we go back in time, not that far, right? Just go back to, 2020 is 409, 350. So very close. In 2021, large cap value funds actually had more assets than large cap growth, right? So don't have to go back that far to see the AUM switch from large cap value. That was probably investors actively saying, hey, growth has gone too far. And if we really can illustrate this by going down to the flows table, and I'm just going to push over the last 10 years. And I want to show you something pretty interesting, right? Starting in 2017, value had more inflows than growth. 2018, value, more inflows than growth. 2018, 2019, we see this consistently. 2020 during COVID, a few more dollars went into growth, but pretty equally, 22 billion to 19 billion. Then we saw in 2021, investors really allocated more to value, 75 billion to 41 billion. 2023, 91 billion to 29 billion. And then something happened, right? Starting in 2024, we saw 35 billion into growth. We actually saw money come out of value. Last year, 106 billion into growth, only 54 billion into value. And so far this year, 98 billion versus 47 billion. So we're seeing a reversal of the trend where folks tend to reallocate from their winners to their losers. So taking money from growth into value. And it just poses the question, are we kind of at an inflection point where this growth versus value story has played out for so long that your asset allocators are starting to give up on that trade? And I thought it was an interesting point, something I saw from our weekly recaps this week. So I just wanted to do a quick spotlight video on value versus growth, and you be the judge. But right now, the data suggests that potentially big asset allocators that command the lion's share of the assets in large cap value and growth funds are not rebalancing. They're letting the money, the flows are continuing to grow into growth, which is obviously outperforming value, which bucks the trend over the last decade plus. Hope you enjoyed today's video insight. If you have any questions, reach out to Team ATF Action. Thanks for watching and talk soon.